Good afternoon, Ken. Thanks for joining us.
Great to be here, Carolyn.
So Ken, let's start by talking about volatility. I know you closely track the VIX. I'm just checking it now. Actually, a little bit lower today, down about 3.6% to about just under 23. What does that tell you? And what's your call? Is the worst behind us in terms of the downturn, or is there more pain in store?
Oh gosh, that's a great question. So just a little background. The VIX, I don't think a lot of your viewers really tune into this a lot, but the VIX is again, it's not always a direction of one way or the other, but it is a precursor at times. And last summer was the best of all trading, right? Low volatility, market setting records. Your VIX is 12 to 14. Fast forward to the crisis starting in January and February with the invasion of the war and so forth. We started seeing a 34 VIX. Now, again, to translate that, that's about a 2.5% intraday move. And that's a lot of volatility. We like that gentle run up in June, July, August, nothing like that. Now, middle of March, something kind of interesting happened. The market's kind of going sideways, but the VIX is coming down, the fear gauge is coming down, which set us up for a nice little run we had the last couple of weeks of March. Coming into this week, well, that was kind of interesting. Tuesday lifts, Wednesday lifts, today down a little bit. So I don't think we're out of the woods yet. There's still so much turmoil between Russia, Ukraine, and whose side you're on. In addition to the Fed, who, by the way, yesterday we heard from I think 3 Fed governors. We want them to be transparent, but do we need to see them 3 times a day to tell us that they're going to raise rates like a bidding war 8 times, 10 times, 12 times? So here we are. So I think that VIX could still kind of go up a little bit more here. I wouldn't get complacent with it, but again, I want your viewers to kind of keep an eye on that, because it usually is a precursor to a move.